Well, interest rates have not been moving in a nice direction this week. We have seen some pretty significant increases. We're going to talk about what's moving the market on today's video. Well, let's dive right into the numbers. Mortgage News Daily, this is a survey of a 30-year fixed rate conforming loan, has us sitting at 7.02% for a national average. We were at 6.92% 1 week ago today, so we're up not quite an eighth of a point in a week. We were at 7.09 30 days ago, so we've essentially lost the gains that we had seen in the middle of the month. We had seen a little bit of improvement in the middle of the month. We saw rates back into the middle to higher sixes, and we are back up over 7%, y'all, in the national average. Now, let me hasten to add, which I often do on these calls, this is not where rates are for us on any given day on any given loan. So for specifics, call me. I still haven't locked a rate in the sevens. So it's important to know that we're far more aggressive than what you're going to see on the national average for the most part. So call me for your specific scenario, and I'll be happy to run those numbers. Inflationary news is what's moving the market, y'all. Producer price index came in today up 0.6%. That was double estimates for what core inflation was going to look like, significantly higher than what the market was expecting. Year over year, producer price index is up 1.6%. We had expected it to be up 1.1%. So a pretty heavy miss to the wrong side of this estimate for the producer price index. Primarily fuel is what's moving that. Gas prices are up quite a bit. So we are seeing that reflected in these numbers. We would see more damage from that, frankly, in interest rates. We've seen a big increase, but not as much as you would have expected with core inflation being that high month over month. And that's owing primarily to a weaker than expected retail sales report that came out today as well. So the fact that the consumer is pulling back some could offer some relief to future inflationary reports. So just something to keep an eye on. That retail sales number being weaker took some of the steam out of that hotter than expected PPI. PPI is also being looked at through the lens of this week's consumer price index, which came out on Tuesday. That report pretty much met expectations, although the headline number was a hair higher at 3.2% year over year versus the 3.1 that was expected. But the month over month at 0.44 was right in line with expectations. So the CPI report coming in as expected, retail sales being a little bit weaker than expected, is taking some of the steam out of these hotter than expected producer price index numbers from today. In any event, has this given enough information for the Fed to maybe stall a June cut? I don't think so, y'all. I think we are still on target for that. The market is still largely pricing in cuts that begin in June. I don't think we've seen a blockbuster hint at inflation that would drive us in the other direction yet, but we're going to keep our eyes on it. So as always, I hope this information is helpful for you and for your clients. We're always honored and blessed to have your referrals. All of my contact info is on the screen. Hope to hear from you soon. Stay blessed, stay safe. We will talk to you next week.